This is what I want us to focus on. Let's say I went back to the bank rather than go sell it, because we can. Somebody will probably pay us $70 million for this property because the revenue warrants this. They're buying the income stream of this property. Great location, great property, great management company that's managing it. We have a team that's overseeing the management company. All this happening. And over 10 years from now, that same property now is worth $70 million. Or before that, who knows, right? So we take that $70 million. I go back to the bank instead of selling it, because I could go sell it, right? We can take our money off the table because we already got the majority of our money back. But I go to the lender and I go, hey, would you guys lend us 65% loan to value on that, on the 70 million, right? Times 65%. They would give us $45 million in new debt. So they give us 45.5 in new financing. Right now, remember, what we had in the deal, we paid $50 million. We put down 20. Our debt then, again, 10 years ago was 30 million. So that leaves us with another, what, $15.5 million. $15.5 million. And that's a non-taxable event. This is how wealth is created. $15 million non-taxable. We made, again, I know I'm going fast, guys. Stick with me on this one. I just get excited. We made what, $10 million. So we were in the deal. That's just a basic revenue. That's if it never went up. But what we said, we're going to be pushing the rent. So the 10 million expected, 5 million because we kept pushing it. And 5 out of the 10 years, 5 years, we bumped the rent $600. We made an additional 5. And with that additional million, that new valuation, we added $20 million worth of increased value based on the income of that same $50 million property that we bought. And like I said, then rather than sell it, which we can go to the market. I'm sure 10 years from now, that same property, great location, great management. If we were to exit that deal, if we wanted to, we can sell it and we'd still sell it for 70 million. I'm positive I can do that. I could substantiate that with our income. Make that money, or go to the bank and go, hey guys, me and my investors want to put new debt on the property. We want to recapitalize this thing. And they go, okay, what are you thinking? And we show them the new revenue income. We show them how we've done it. We show them how we've taken care of everybody. It's been stabilized. It's a mature loan. Everybody likes it. We go back and we go, what will you give us? Will you do 65% loan to value on this thing? Right? And they'll probably say, yeah, of course we can, because I'm going to substantiate this new value. And they're going to say, you know what? Based on that, we'll go 65%. We'll give you 45 million, right? That we'll take out the new debt, we'll take out the old debt, which was 30, leaving 15 million. Vic, where do you want that? I'm going to distribute that to you guys. We're going to make a lot of money. Now, we've already made pretty much already made the majority of our money back and then some. Now, we're going to keep this property and we'll just keep it cash flowing the whole time. I won't kick you guys out of the property. We'll stay into the property. And then that's how wealth is created, because now you got all your money back and then some. And you got this big lump sum of money over the top of that was non-taxable. And I'm still sending you guys cash flows for as long as we own this property, as long as we're partners together. That's how this deal works. And oh, by the way, I didn't mention it earlier. I didn't write that down. We also get depreciation on this property, right? So the money that we put down, we'll probably get about 30% of that to be able to offset, to depreciate all of our taxes. So a lot of our cash flow will probably be non-taxed, right? We can write that off or tax depreciate or tax deferred. So this is a great game. This is how the real wealth is created in multifamily real estate for investors. And very few people go over this. And when they do, and again, this might have been confusing because all of my scribble scrabble. But go back and watch this video again. You get the understanding. Capital appreciation, your cash flow, the increased revenue of the property, meaning like going in and raise the rents. And then you got your appreciation, your new increased value based on the income of the property here, right? Brings it up. We made another $20 million. This is the new equity. This is the piece we created. And then go back to the bank or to the market. We either sell it to a new buyer and ripped our heads off. Trust me, if I get a property that's valued at this, at a 5 cap, I ain't selling it for 70 million. I'm going to be pushing the numbers up a little bit higher than that. And then, or we can go back to the lender, right? This is the fifth way. This is the main way. We can do this. This right here is the MACDAC. This right here is the wealth. Boom. This right there is the wealth. To be able to go back, recapitalize this, pull out that money, and not pay any taxes on it. That's the game of how the wealthy play this game, especially using multifamily real estate, the institutional level, business level real estate that I love, love this game. This is so easy to do. Multifamily real estate is probably the simplest and yet sophisticated institutional investment asset class that you can get into for the everyday investor like me, like you. People are always going to need a place to live. This isn't an office building. This isn't retail. This isn't like a warehouse where you're trying to get a better understanding of depth of concrete and all of the things that need to go into some of these new assets. This is multifamily properties, great locations, great amenities in cities that are not going away, with assets that cannot just easily be destroyed. That's what I love about it. AI is not going to take it away. New technologies other than AI is not going to take it away. It's not going anywhere. We're always going to, and more people are moving into being renters and becoming a renter nation than ever in the United States. I mean, the government and the feds are ensuring the fact that people do not trust what's going on. So people will continue to rent and be fluid and nimble for the rest of their lives. I mean, that's just kind of what we're leading into. So invest in multifamily real estate. Either do it on your own or invest with us. We want to have you. Reach out to us. Go to bell-capital.com. Let's talk. I know this was a lot, but you can talk to me. You can talk to Prashana, anybody on my team, to be able to answer any questions you may have about potentially investing with us or on your own, how this works, how, like what do you need to have, whether you're accredited, because right now our fund is for accredited people, all of it. Book a call, get on the schedule. The calls are 5 minutes long to answer your questions, or just go to the portal. Go to the portal, register your account, go to bell-capital.com, click get started. The paperwork's there. Take a look at it. We're here for you. We don't have any illusions that you're going to invest hundreds of thousands of dollars with us without talking to a human being. I'm here for you for that. I want to talk to you. All right. So, I just wanted to share this with you. I got long and I got excited because this is fun for me. I love showing people how I'm going to make them money, how we're going to make money together. I want to do this with you long term. Man, this is the best opportunity you're going to have as an everyday individual person to be able to get these quality level assets. And this is how the money is made here. So I want to show you that so you get a better understanding of what you're dealing with. All right. So let me know if you need anything. You guys have a great day today. Are you an accredited investor with $300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with $300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.